Smart 24, driving business.
No data, no problem. Zabu allows you to buy or sell securities on the Altex exchange from anywhere in Uganda via USSD. Step 1. To buy, dial *292#. Step 2. Select buy. Step 3. Select the product you would like to buy. For example, bonds. Step 4. Select your preferred maturity year. Step 5. Select the bond you would like to buy. Step 6. Input an amount of 15,000 Ugandan shillings or more. Step 7. Your order has been forwarded for processing. And finally, Step 8. Your order has been confirmed.
Very warm welcome back to the program. Thank you for once again joining us. This is Financial Markets. My name is Anthony and I am with Victor Kiberu, giving you live updates on what is currently happening on the different stock markets. The show is powered by Altex East Africa, and with Altex you can buy bonds today in Kenya, Uganda and Tanzania using your phone and using your mobile money wallet. Simply grab your phone and dial *292# and follow the prompts. 1. You can learn more about the products. 2. You can also register. And 3. You can start your journey of investment with as little as 15,000 Ugandan shillings. Markets open at exactly 8 a.m. and close at 3 p.m. East African Standard Time. And with Altex East Africa, we are saying you can do something new. I think now let's get into the Nairobi Securities Exchange, Victor, and have a look at what is happening in NSE. What do you have for us in NSE, Victor?
So, of course, starting with the peak story, before we get into the actual highlights of the stock exchange, we actually going to go into the highlight of today, which is Kenya's financial markets ranking falls in Africa. So, of course, as of yesterday, we saw that the Kenya financial markets standing on the continent was taking a major beating from the country's foreign exchange. Of course, trouble tied to dollar shortages and falls in their forex reserves. So, of course, according to the 2023 ABSA Africa Financial Markets Index, that is to be launched, of course, that was launched yesterday actually. Kenya's country ranking has fallen to the 7th spot, and from the 6th place, with Botswana taking its place to the 6th top. So, of course, I'm sure you've been seeing this news going around. What do you make of it?
Absolutely fascinating. There's I love the ranking of these forex different exchanges around the world, and especially in Africa, and ABSA is doing a great job for us. But last year Nairobi was the 6th, and it performed quite well, competing with stocks like the Egypt Stock Exchange, the Nigeria Stock Exchange, the Johannesburg Stock Exchange. And I was shocked actually to find out Nigeria was the very first and topmost performer in these stocks. But now that we are seeing this report come out with Nairobi coming in the 7th spot and Botswana coming in the 6th spot, that shows you how much the forex reserves shortage and also the dollar depreciation, rather the Kenyan shilling depreciation against the dollar has affected the markets. But also there's something else besides these two that I think is eating up the Kenyan market. The influx of foreign exchange, foreign investors within the markets. This is one of, I think, to me, the biggest contributors to the fall in the markets here in Kenya. For example, currently the market capitalization is lying at 1.46 trillion, but just over 7 months ago it was crossing almost 2 trillion Kenyan shillings. And this was due to the the buyout, especially during the beginning of the year when there was a lot of attractive treasury bond yields in the United States markets. Most of the foreign investors were pulling out of the Kenyan market. And this is why some stock exchanges like Botswana and Nigeria are taking the mantle. Why? They have lots of local investors. So they feel the investments are part and parcel of their lives, because these are companies that are present in their country. These are companies they are seeing on the ground. But foreign investors, they are global investors. They will go wherever there is a profit. And wherever there is no profit, they will pull out. And you know, Victor, you know better that anytime you have a massive pull out of investments, you have a massive drop in the value of those investments. And that's exactly what Nairobi Securities Exchange has been going through over the last years. But also the depreciation in the Kenyan shillings, even against the Ugandan shillings, you could tell Kenyan shillings have dropped to over 23 from an average of 30 shillings about 1 year ago. That shows you that the currency has also suffered due to a reduction in the exportation and more importation of second-hand cars, second-hand clothes, and so on and so forth. All these things come back to the stock markets and do affect how the stock markets are. Now that we are having even more inflation within the East African community and fuel prices going up, we expect a little bit even more turmoil. But all is not lost. The markets still have a lot of promising ideas when you look at how they are promoting local investment at the Nairobi Securities Exchange, encouraging farmers to be able to buy shares in these small companies, and also giving them chance to list. When you look at Nairobi Securities Exchange, unlike Uganda, for example, they have a very active growth enterprise market segment. The growth enterprise market segment gives chance to smaller companies like Kapchorati Company, for example, like Home Africa, a property developer, like HF Group, Olympia Capital Holdings. These are all small companies, not very small, but small enough compared to the other bigger conglomerates like Absa and Safaricom to list. You know, this can give them a very good ground to also be able to add a block to the performance of the exchange.
Now, of course, thank you so much for that insight. Of course, survey respondents mentioned that there was a forex turnover decline in Ghana, Nigeria, and as well as Kenya. So, of course, it led to rise of concerns about the shortage of forex, while interbank FX liquidity remained limited or negligible for other economies. So, of course, these are things to note. Of course, as Kenya's forex concerns began to simmer early last year, when importers, including manufacturers, reported constrained dollar access as commercial banks, of course, limited supply. So, of course, coming back to the trading summary as of yesterday, we had the Nairobi Stock Exchange close. We had the Nairobi Stock Exchange, of course, close at a total of 9,137,700 shares in 943 deals. And of course, it was corresponding to a market value of 166,674,759. So, of course, compared with the previous trading day, we are seeing today's data, of course, is showing a 41% improvement in volume and a 3% improvement in turnover. Of course, we're also seeing a 4% improvement in the deals. So, of course, this is leaving our market capitalization still at a staggering 1.46 trillion Kenyan shillings. So, of course, moving to the listed companies, we are seeing 19 gainers as well as 19 losers. This is a pretty balanced state, of course. But moving to the gainers, starting with the gainers, of course, what do you have for us?
I'll pick out Safaricom. First of all, I'm glad Safaricom is getting back to its feet. Yesterday they gained 0.3 shillings up to 14.2 Kenyan shillings, and this is an improvement and something that we can applaud, but not good enough for a big stock like Safaricom. Safaricom currently is still number one most traded, number one most valuable in the market, but the activity has been hampered by the factors that I mentioned before, the inflation and the increase or influx in foreign traders or foreign investors within the Kenyan markets that have been pulling out depending on their sentiments and how they feel about the market. However, now we are seeing more locals invest in the company, and also the company is opening a new branch in Ethiopia, contributed pretty much to a better outlook of the company's margin, profits, which could actually get more investors interested in investing in Safaricom. Yesterday, they had about 2.05 million Kenyan shillings traded in over 146,600 shares, which is still maintaining the momentum that we know Safaricom for. However, the losses are still quite cumbersome to the investor. In 6 months, they have lost 24%. In 4 weeks, they have lost 9.45%. Year-to-date performances are even worse by 42% decline. Beginning the year, Safaricom had about they started about 24.15 Kenyan shillings. Right now, we are celebrating 14.2 Kenyan shillings. That is almost approximately 45% loss. Not very good news for investors. So there is a lot more effort that is, probably has to be put in by the exchange to be able to promote local investment. Again, it comes back to us, even in Uganda. The less local investors we have, the more our markets will be liable to external pressures like inflation, dollar shortage, forex reserve shortages, and all these will be bombarding the markets and driving them to whatsoever direction. But I'm also happy that stocks like the Cooperative Bank of Kenya are still maintaining momentum. Centum Investments as well, despite the wars that it has been through, they are also trying to maintain the momentum. Yesterday they didn't gain or add anything to their value, but they maintained the 9 Kenyan shillings, at least for the day, and that was very, very good news for the company after trading about over 313,000 Kenyan shillings, which is quite commendable for the stock. I'm still disappointed in companies like Absa Bank and we'll say also Stanbic Holdings, as well as East African Breweries Limited. There's still very little activity compared to what we've been having just a couple of months ago and a couple of weeks even ago. We are still looking at very minimal activity. Otherwise, I'm also impressed with smaller stocks like Liberty Kenya Holdings that have maintained the gains, which is very, very, very promising. Home Africa, for example, HF Group, and the like. When you go to the Kenyan market, it's not like us, we are limited to stocks, but the Kenyan market has other products that we know of as derivatives. They have ETFs on their stocks. This means that, for example, if you want to invest in the smaller stocks, which are much better at performance, you could invest in a derivative that is tailored to a stock. Right? I mean, to these smaller stocks. That means you can invest in all of them at once. And that means you're gaining. But at the end of the day, when you put them together, you're much better off than someone who is investing in a big conglomerate that is not giving them value.
Of course.
Yeah.
So, of course, adding to the insights on the Nairobi Securities Exchange, gainers. Of course, this is a summary of everything, and Liberty Kenya Holdings, of course, led the gainers with a 9.8% share price appreciation. Of course, it closed at 3.96 Kenyan shillings per share, and of course, it was followed by Standard Group that also had a price appreciation of 9.78%. We're seeing Home Africa with a price appreciation of 9.68% as well. We're seeing HF Group with 9.09% appreciation as well. So of course, on the losing side, it's leaving us with Olympia Capital Holdings that came out last with an end of day price appreciation of 9.47%, and of course closing at a share price of 3.06 Kenyan shillings. It was followed by East African Breweries with a price depreciation of 7.68%, and we're seeing BOC Kenya with a price depreciation of 5.88%. Carbasid Investments with 5.05% depreciation. And of course, as you've had, we had Safaricom with the highest volume, followed by Centum Investment, as well as Cooperative Bank of Kenya and Kenya Power and Lighting Company. So of course, with gainers and losers, that is to mention but a few. But of course, if you want more insights on the gainers or the losers, you might as well go and see any of these listings and see what you make of it. So of course, going into the market indices, as we have seen previously, the Nairobi Securities Exchange it was actually competing pretty well with the Johannesburg Securities Exchange. But of course, as it's declined to the 7th position in, of course, Africa's big dogs, we might as well dive into the Johannesburg Securities Exchange later to kind of compare their performance. But of course, going into the Nairobi Securities Exchange market indices, we need some insights on the benchmarks, of course, as well as other share indices within the stock exchange. So of course, Anthony, what do you have for us there?
NSE has created another index, a new one, which is the NSE 10, tracking the top 10 stocks on the Nairobi Securities Exchange. Pretty interesting how Nairobi really, much as they're going through a lot, they are devising means. Whenever you have more indices, you have more practical ways of looking at stocks than rather just looking at one single stock at a time. Investors usually don't have much time for analysis. They want to know what is happening. And the market index gives you exactly that. And I'm proud to say the NSE 10 is doing well so far. The NSE 20, also tracking top 20 stocks, is at a 0.6% decline in just yesterday's trade, but still doing strong in the year-to-date performance. However, the NSE 25 is not doing as well. So that gives you a very good opportunity for you to see where you want to put your money. You want to go for the big dogs. You go to the top 10. You know, I'm only investing in the top 10 companies. All right, and if you want to know how that is doing, you look at the health of the NSE 20 index. This is exactly what Nairobi is doing. But the all-share index is dropping 0.6% yesterday, 0.64% yesterday, at least 93 points closing off the day. Remember, this is a price-weighted index, meaning anytime you have a decline in price, it affects this index. That is exactly what we are seeing on the market. Nairobi, mostly the big stocks like Safaricom that have been having the big prices are falling. And that is why the all-share index is also slightly falling back. But like I said, the NSE 25, the NSE 20, and NSE 10 will help our investors and our viewers here to get to appreciate more of the top and the mid-top, if I could call those stocks, the mid-top stocks performance, which can give you exactly where you want to put your money for the long-term gain. But there is still more activity that is required for us, especially for the local investors within East Africa, for us to have the improvement that we want to see in Nairobi.
Now, thank you so much for that insight. Of course, going into a quick dive through the Johannesburg Securities Exchange, just for comparison with its with the Nairobi Securities Exchange. So, of course, it closed at a total of 349,671,401 shares in 409,123 deals. So, of course, corresponding to a market value of 22,590,715,576.35 rands. So, of course, that is exactly what was traded. And compared with the previous day, we are seeing the data is showing a 3% decline in volume. We're seeing a 6% decline in turnover. But of course, we are not going to ignore the 1% improvement in the deals, leaving us at a market capitalization of 17.6 trillion rands. So of course, going right into the aggregate, we're having actually 310 listed companies on the JSE, and of course it ended with 126 gainers as well as 166 losers. We're seeing Kibo Energy leading the gainers with 100% share price appreciation, and of course followed by it we're seeing Sebata Holdings, we're seeing Subvest Capital, we're seeing Transaction Capital, we're seeing Trustco Group Holdings, and of course going on to the loser side, we're seeing Choppies Enterprises, we're seeing Jubilee Metals Group, we are seeing Grind Drop Shipping Holdings, we're seeing Growth Point Properties, and actually we're seeing Growth Point Properties with the highest volume of 28.1 million traded shares. But of course we're also having Fortress Right Limited with 26.2 million shares, as well as FastRand with 18.3 million shares. So of course the indices aren't doing as bad, but of course we are not seeing any perfection as yet. But of course we're seeing the all share index at a 9.03, leaving us at a 0.01 percentage appreciation within the points, and of course it closed at a 73,849.53. This of course represented a 1 week gain of 4.66% and a 4 week loss of 0.32%, but of course an overall year-to-date gain of 1.1%. But let's not forget there are other indices, remarkable indices of course that performed, and we're seeing the mid-cap index at a 0.55% appreciation. We are seeing the small cap index at a 0.24% appreciation, and of course the top 40 index at a 0.06% depreciation, as well as the large cap index at a 0.21% depreciation. So of course that was an insight on the Johannesburg Securities Exchange, just for comparison with the Nairobi Securities Exchange, as of course in this show we have been putting them side by side, because it is quite impressive to see a stock exchange like Nairobi being able to compete with Johannesburg, and yet it is within East Africa. Yeah. So of course going back to some more financial news or insights.
And Victor, on Johannesburg, I realized how innovative they are when it comes to their products and what they're dealing with their companies. Johannesburg Stock Exchange is proud this year to launch a new collaboration with the carbon market company that is Expansive, premier infrastructure provider, and they are doing this in order to promote green energy, in order to promote climate friendly businesses. This is a very good project, which I believe is in line with the SDGs, and that is conservation of the climate being one of the SDGs that we want to attain by 2030. Some of these are the things that keep the markets going. When investors see that you mind the environment, you do mind that most of the listed stocks, for example, Johannesburg Stock Exchange, are mining companies. They pollute the environment. They do have a lot of emission that contributes to the climate change that we are seeing in the entire world. But what are you doing about it as the stock exchange? Are you just, about the gains and the gains and the gains? No, that's exactly what Johannesburg Stock Exchange is very special and unique about. They
one other good thing about most of the listed companies, they are largely diversified. You're looking at companies that have listings on the New York Stock Exchange. Yeah. They have listings within Australia. London. They are really diversified, and yet
and you've seen stocks from Australia list as well on Johannesburg.
Yes, and very interesting. And looking at the rankings, you're seeing this particular company is listed on the New York Stock Exchange, but of course it has a position of like 128. So it goes to show you that so many of it's actually something normal for most of the companies on their stock exchange to have listings on other big dogs beyond the continent.
Absolutely.
So of course, moving on to other insights on very important financial news, we'd want to dive deeper into some of the latest headlines we've had within the past hours. So Anthony, what do you have for us from that end?
In the United States, investors today, Thursday, of course it's just still Wednesday Eastern time now, but just a few hours from now, they will be watching closely for one of the most important data points from the Federal Reserve Bank, and this will be considered in its next interest rate decision, and that is September's Consumer Price Index. The Consumer Price Index is very important in the United States, and this is especially the monthly Consumer Price Index. It can drive the markets any direction. The report is set to be released at exactly 8:30 a.m. Eastern Time and is expected to show a slow down a little in the headline inflation of 3.6%. This is in contrast with August 3.7% as per the annual gains in prices, according to estimates from Bloomberg. Now, over the prior month, consumer prices are expected to have risen about 0.3% in September, a slower clip than August's 0.6% monthly increase.
So, of course, this goes to show that oil will continue to be a big area of focus after the energy prices drove the bulk of August's price increases. So of course, energy prices, which have fluctuated amid the ongoing crisis in Israel, are expected to have moderated by last month, but with Bank of America anticipating a modest month-over-month increase of 0.4% following the 5.6% jump in August. So retail gasoline prices, however, will likely to be a little changed on the month, and of course this is as the bank has said.
Bank of America as well is expecting a continued pressure on the food prices, which increased by 4.3% in August on an annual basis of 0.2% month-over-month basis of about 0.2%. On the core basis, which of course strips off the volatile food and energy prices, in September it is expected to have risen by 4.1% over the one last year. That is a slowdown from the 4.3% annual increase seen in August, according to Bloomberg data.
Well, of course, that is it for that particular point. Yeah. But of course, not missing one single point, monthly core prices, of course, as mentioned, are expected to have climbed by 0.3%, matching August's monthly rise, of course. Yeah. But within core, used car prices are expected to have fallen further by last month after dropping a 1.2% month over month in August. Yeah. And of course, 1.3% in July. Yeah. But of course, pulling back our focus to Uganda, we have headlines from the Bank of Uganda and their latest policy, of course, concerning their latest information concerning the over-rising fuel prices. Yeah. So, of course, Anthony, what do you have for us from Bank of Uganda?
Well, Bank of Uganda has said it is concerned about the high foreign exchange depreciation and rising fuel prices, both of which present new risks to the economy, and that has remained resilient against global fragility. While releasing the report of the Monetary Policy Committee, that is the Bank of Uganda Deputy Governor Dr. Michael Etinji actually said the fuel prices and the volatility in the foreign exchange market had forced the central bank to maintain the rate at 9.5%, the CBR, that is to say. Now, this is a relaxation from the 10%, which was actually maintained since the beginning of the year up to around the month of June and July, when they finally dropped off the 0.5%. Fuel prices have remained quite high comparing with the previous couple of months. Looking at now the different petrol stations, I think the average is about 5,200 for diesel and 5,400 for the petrol fuel, and that is exactly what the Bank of Uganda is saying, that the prices could be rising even further.
So of course, to insulate the economy, Bank of Uganda maintained the central bank rate, which is key in determining the cost of credit in the market. So of course, Dr. Ating Ego said that the current downward trend in inflation is of course projected to continue due to lower lower imported inflation. This further easing of food crop prices and subdued aggregate demand. So of course, Bank of Uganda projects an inflation drop to range at 3% to 4% in the fourth quarter of 2024.
Yeah.
But of course, the projections are, however, subject to risks, and among which include faster than projected fall in global inflation, while at the same time a prolonged higher inflation in the advanced economies could lead to higher interest rates, which might trigger further capital outflows and further worsening of the exchange rate due to depression.
Yeah, well, thank you, Victor. And that gives us a roundup of the business here in the financial markets realm in East Africa and within the Ugandan realm. So you can always catch more updates on our website at www.smart24tv.com. You can also follow us on Twitter at Smart24TV now, and our YouTube channel and live stream is at Smart24TV Live. Till next time, have a very good day. Bye for now.
No data, no problem. Zabu allows you to buy or sell securities on the Altex exchange from anywhere in Uganda via USSD. Step 1. To buy, dial *292#. Step 2. Select buy. Step 3. Select the product you would like to buy. For example, bonds. Step 4. Select your preferred maturity year. Step 5. Select the bond you would like to buy. Step 6. Input an amount of 15,000 Ugandan shillings or more. Step 7. Your order has been forwarded for processing. And finally, Step 8. Your order has been confirmed.
Smart 24, driving business.